Well, hi there. This is John Medwin, and I want to talk to you about premium financing. I'm sure if you're watching this video, you have an idea for what it is and how it works. I want to show you, in my opinion, the best one there is. So let me share my screen with you. So this is a case right here for a 44-year-old male. Let me get my little highlighter up here. 44-year-old male. Preferred non-tobacco. The premium on this case for 10 years, each year was $671,353. Now, the nice thing is, if you know anything about premium financing, he did not need to pay it. He paid zero. Okay. In fact, he doesn't need to pay anything. He or she does not need to pay anything in the way of premiums. In this case, this particular gentleman decided to opt for a payment of $42,680 for 2 years. And this is optional. Doesn't have to do it. Just did it to sweeten the pot. Okay. The lender financed it all. Now, here's the thing with most premium financing is most premium financing ends up, the lender gets their loan back usually in years 10 to 15, somewhere in there. And what that does is that takes a huge chunk of the assets. It's like half the air goes out of the tire, right? And so it grows a lot slower because the lender wanted their money back right away. They got it back. The nice thing about this one, what's so different about it, is this lender will wait until you die, okay? So in this case, he gets an income of $605,000 every year of tax-free money. Okay, as you can see, it goes on all the way through his entire life. This page just ends at 92, but it goes his entire life. So the question is, why would they wait so long? Okay, most people want their money back right away. Let's just assume this client dies at age 85. Okay, now remember, there is a loan and the lender does want their money back. In this case, the death benefit grew to $104 million. The lender, by the way, says, all right, we're going to take ours first. Fair enough. They get $74 million. And the client gets $30 million of life insurance, tax-free money to leave his family. So in case you're wondering why the client waits till death, it's because they turned 6.7 into 74 million. You figure a mortgage lasts 30 years, right? So in this case, they're just waiting 41 years for a little extra cash. Now, the only other thing to know about this is they do post collateral. Now, we may, within the next few weeks, have someone who will take care of that for you, where you don't need to, but still, even that is not a bad deal. This person ends up posting collateral. So in other words, the lender cannot have risk. They're not speculating. Everything has got to be nailed down, and they're not going to be on the line to lose any money. So in this case, the third year, they end up posting $94,000 on, in this case, it was his mutual fund account. It grew to $602,000. This is how much the lender is on the hook for. So they're covering themselves. And then it works its way down to zero. So generally, at the end of 10 years, there's no collateral to post whatsoever. They're not holding the money. It's just a lien on an account somewhere. So that's really it. Again, optional amount on the front, collateral to post here, $605,000 tax-free dollars, and $30 million left behind to the client. So as always, what I would always recommend is, and again, this is an A-rated company. There's no risk whatsoever. There's no risk of loss due to stock market. So the only thing that accrues is the interest year after year. And again, that's settled upon death. What I always like to do is compare this with another company, another organization. I'll never give you one company I work with. I'm going to take the best two companies I can find and work you up a quote. So if you'd like to talk to me, this is for high wealth individuals, usually assets over $5 million. Actually, I can get some type of premium financing for anybody that's over 2.5, where a lender will fund part of the retirement. But this one right here is for individuals with a net worth of 5 million or more. If you'd like to talk, and again, we'll sit down with your CPA. Obviously, we're not going to do anything without their approval. So let's talk. It's really an amazing program. You really want to take a look at it if you have the funds and you've got an account where you can post a little collateral on it. Never hurts to get a second opinion. Give me a call. I would love to talk to you. Thanks for watching.